you look at Europe, we continue to grow in excess of like 20% Y and Y, right? Americas grew by 12%. That is on the back of 2 quarters of a strong 6% Q on Q growth. If I look at ROW, there also Y and Y it's grown 11%. And if you look at last 2 quarters also, it's grown very well. So when I meant that all markets are doing well from when you look at it on a full year basis, I also did say that India, however, continues to be still, not ticking into what we would like it to be. So yes, there is potential for that market play to open up further, but like we've always said, it's a market where we will play cautiously, we will be selective, and as long as those selective markets are there, we'll compete head on. So it's not our greatest desire to have every program in there. It must fit our overall business model and our commercial model. It does. And if you see that specific win is exactly in that specific area.
Right.
So again in Digital India, it will be a selective play, right? And I think I did mention this. See, for it to really impact, if there is a front-end transformation, just do some front-end digitalization, digital work, I think there are enough players, mom and pop shops all the way up to others who could execute that. What we are looking at are complex engagements which are front to back, and where there is significant change right from the front office or the interface at the front all the way back to the core. And in those are few, because it needs organizational change, and therefore they're slower than what it is. Not a technology challenge, it's more of a cultural challenge. And therefore, as long as whoever the buyer is willing to make that move, then we would participate in those programs. We try to maximize nonlinear growth, so it's not we don't balance. Given the freedom or given a choice, we would like to maximize nonlinear growth. So even in this quarter, I think we've increased our nonlinear growth by about 3 or 4 points, 56 point something from 52 point something.
Right.
So, like I said, non-linearity is a key strategy of our IT outsourcing and all our operating models. And therefore, it's more of a client comfort which defines and dictates how quickly they want to move in there. Because in that model, it needs letting go of the nitty-gritties to the service provider. So the deal terms is not a new thing. Deal terms has been there for a while. So what used to be large, long-term contracts, 7 years, etc. in IT outsourcing, they're for a long time now moved in the 3 to 5 year area. So that's not a new phenomenon. I think that's been there for a while and that continues. I think what's changing is really the mega deals getting split into smaller pieces, and that's taking time because the clients want to re-engineer the way their outsourcing programs will happen. So because of which there is a longer lead time, and we actually see a lot more move towards, so I would imagine a lot more of the very large deals moving more towards H2 of this calendar year. But the deal terms is not a new phenomena. They have been down to 3 to 5 years for a fairly long time. I mean, those days of a 7 to 10 year deal is not been there, and it suits us fine as well, because it allows for what will be after 5 years will be very different from what we do today. So it helps both the buyer and the seller to be able to fine tune and synchronize and make it relevant. So we've defined a strategy around 3 areas, and that's not new. We've talked about it previously: next generation IT outsourcing, digitalization, and Internet of Things led by engineering services. So these 3 areas will be our forte. We will continue to invest in those areas. It's not something we've done one time and we're going to retract it. It is going to be there as long as we see the market play out well, right? We've guided our operating environment in the 21 to 22% range, and we've been having some stellar quarters beyond that, and I think we just now need to execute on what our strategy is for the future and take a more bolder move towards areas we believe in, which are important. So yes, those 3 areas are the areas we will invest, continue to invest in them, and build on that. So the market momentum is strong, right? ITO, like I said, if you take our deal pipeline, it is, in this quarter as we speak, is larger than what it was in the same period last quarter. So I think from a pipeline perspective, from a market opportunity perspective, and I'm generalizing the overall thing, right? It is there. We do see some lag in decision making on very large deals, moving more towards second half of the year. But the quantum of opportunity is good. I see Europe continuing to be very, very strong. There is, mega, global blue chip clients over there who have yet to adopt the next gen outsourcing model. So we believe that's a great play. We continue to believe on our theme of Germany and France as potentials which will open up, but at the same time Nordics and other markets and Switzerland we've been very strong in. So there's no change in strategies there. We continue to be bullish on that. Our play in rest of the world, we said, is around few areas, right? We continue to do there. You've seen the consistent Q1, Q over there. The market is slowly moving from projects to include a little bit of ITO as well. And that's why we'll see some, the base slowly increasing. So South Africa, Australia, parts of ASEAN, we continue to be very strong. India, we are waiting and watching. And like I said, the market is there. It needs to align to what we believe is a good business model for ourselves.